I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara and this is the Know Your Why podcast. Today I'm here with Yomesh Deliwala. He's doing me the pleasure of being a guest on the podcast today. We were talking a little bit before recording started. I guess I'm one of the first few, so I feel honored. Thank you for being on the show, Yomesh.
Thank you. Thank you for having me.
Yeah, absolutely. Well, would you go ahead and just sort of tell people, your background, what got you into real estate and where you're at this point, and then we'll kind of dive in from there into whatever topics seem to inspire us.
Yeah, absolutely. Absolutely. So yeah, just again, thanks, Jason, for having me on the podcast. I mean, podcasts like this and the value that you bring, right? That's truly inspirational to a lot of different players and a lot of upcoming players as well from a multifamily, just learning as such, right? So this is great to give back to the community as a whole, right? So with that being said, right, Yomesh Deliwala came into US in 2000, early 2000s, and working full time, still working full time as my day job, 9 to 5 at a technology firm. But I come from a very humble background from India. For the audience, it's a western part of India. It's a city called Ahmedabad. Very humble beginnings. I saw my parents. I'm the younger of the three brothers, and I saw my parents everyday hustle. Growing three boys in the household, right? So it's always a hustle there. So I saw my parents.
I'm sure.
Yeah, exactly. My mom, working really hard. My dad really working really hard, and always looking for those side hustles, right? So being young in the house, I was always present, and I saw most of the beginnings in the house, right? You always try to do something side hustle before the job, after the job, 2 jobs, 3 jobs, whatever, right? So I kind of saw that and grow into that, and that's where I set my sight into a lifestyle that I want to be part of, right? Which is, of course, there's nothing wrong with what my parents did. They had to do what they had to do to grow three boys. But now that we are here, right? I mean, I set my eyes into a lifestyle that I want to live, right? Which gives me the freedom of doing what I want to do, right? It gives me, puts me at a level of comfort where, I'm not hustling for money, but I'm hustling for more quality of life, right? And money is just, it's like, strive for excellence and success will follow you. Or, so something in that nature is where, you strive for excellence in what you try to do, and then you're eventually going to be successful. And to a point where you make enough living and you're able to live a comfortable life. So I don't want to go into like obviously money is a factor, but then living that quality of life, right? Just being with a family, freedom of, of time, and where you can commit your time, whether it is your finances, your fitness, your family, your friends, wherever you want to put your time in. That's the flexibility of it.
Yeah.
So that's a brief overview on that. On the real estate side, right? It's a pretty interesting story on how I came about, right? So uh, earlier 2000s, the moment I came into the United States, obviously, immigrant like any other immigrants in the land of opportunity, right? So a lot of opportunity I'm a computer science graduate, so a lot of computer science graduates, as you would do, you end up into an IT job and start working towards it. So one with a knack of looking at passive income, I was always on the lookout for something where my passion would take me, right? So early on during the days, while I was living in the apartment, I invested in a townhome. So I bought into a townhome. So that was my first property back in 2005 that I signed up. It was a brand new construction. I was still living in the apartment. Few months down the line, we moved into our own house and kind of go from there. But between then, 2005 to 2016 is when, I'm in Charlotte, North Carolina. So between then and the 11 years following that, eventually uh, dealt into a lot of different single family homes, townhomes, built my own portfolio within the city, and grew myself with the city. So
Right.
that's how I built that. And in 2019 is where between 2016 and 2019, I did not invest in anything. Just if you look up on the history of Charlotte market, things started to blow up, but to a point where it was not affordable, right? So, or affordable in the sense of not enough cash flowing property, cash on cash, all kinds of matrix that you can
Right.
think of. And so there was a gap or a hiatus of about 3 years where I was just contemplating, just sitting with my assets, sitting with my money, um, trading in stocks. But 2019 is when I got in touch, and my partner Himo Badiani and I. So we have a firm now. It's called Exponential Equity. But we came together and kind of put our minds together. Over a session where we were a couple of friends over a couple of drinks. Start thinking through, talking about multifamily, and then suddenly the light bulb clicks, and we're like, hey, you know what? This is a no-brainer, depending on the numbers that you see, and what kind of output that you can get, and how you can systematically run this as a business, right? It's not your single townhome that you can get hold of, and then put all your eggs in one basket, versus having a property that you can systematically manage as a business, work with several set of partners that you can, and then kind of grow. So it was like a light bulb click. Invested a good amount of time in learning about it, and then I kind of jumped right in head first, and
That's the way
got
to do it.
into a bunch of properties. So I'll pause here, and we'll go into the next set of questions. So
Yeah, no, I mean, thank you for sharing your story. I think a couple of really interesting things. I mean, you did some things maybe that are different than what most people might sort of expect, and I would say probably smarter than what than what a lot of people do. But you said, you lived in an apartment and actually invested in real estate as your first step, right?
yeah,
So I think that's kind of brilliant, and I think, maybe tell us a little bit about what your mindset was at that point, kind of why you did that, why it wasn't like, oh, we need to have our own house, our own place to
right.
live in before we buy something else.
Yeah. So the basic the way I had put my finances, at least in the place there, was I put, obviously, anybody who is on a W-2 job, right, on a day job, they always put their W-2 in front, right? So one of the topmost risk mitigation strategy is where, okay, there is no W-2 income, how is that going to work out, right? What are we going to survive on, right? So that's where the entire thought process of passive investing came into play, right? So you know apartment, when I bought the first townhome, that was the exact thought process as to, okay, I have a W-2 job, right? And what am I doing to further myself to away from that W-2 job, to get that time back for the family, and also that financial freedom, so that if God forbid whatever happens, and if I'm running out of finances on all angles, at least I can have some sort of income where I could bring food to the table, right? So that was the thought process, and I always wanted to start somewhere, right? So it was at that point in time, this was back in early 2000s, and that's where I was in contact with a couple of my friends, and they moved down from California. They had spent like decades of their life living in an apartment over there. They
Yeah.
suddenly come to North Carolina, and then they realize that, hey, you know what? The standard of living and the cost of living over there in California versus Charlotte or Carolinas here is completely different, and now we can afford something. So first and foremost thing they told me is like, hey, you know what? You need to start investing into real estate. So and then like the way I am, I'm like, okay, no better way to start from than today. So we went out into
Right.
the market, saw a bunch of new communities coming up, saw an opportunity, put the money down, and we're like, okay, let's take a plunge into it, right? So
Yeah.
that's how I kind of, that was the story behind our first investment.
Yeah. Yeah. I love that approach. And I think it highlights a lot of things that, maybe people that aren't invested in real estate maybe don't realize what the sacrifices are that people will make to get to that level. You have to know it's a bit of a long-term game. And so, but you have to start the game, right? You have to do something. You have to take some sort of action to start that process, right? Because it's a long-term game. If you never start, you're never going to get to the point where you see people
if you want to play the game, you need to be on the court.
Yeah,
so
exactly.
The only way you need to be on the court is where you get in the game and start, you figure it out, right? That's another thing that so, but yeah, I mean, that's that's what my background has been from the first investment, at least.
And I think it in a lot of ways, when your first investment, if you're investing with your own money and things like that, you're buying single family or a townhouse or something like that, it's maybe easier to take that risks and learn the ropes before you get to the point of where we'll talk about multifamily syndication and things like that. But so you started at a level where you're like, okay, I want to get going, I'm going to take this risk myself, which, as you mentioned, probably honestly isn't any more risky than working for someone else in a job that you could lose at any time.
Right.
So it's kind of like I think it's some really important messages that maybe people don't realize. Another thing that stood out to me there is the timing of this. So you bought the first one before the housing market crashed, right? And then kind of apparently rode that wave and got through that well. So how did that shake out for you? I mean, I know the 2008 market crash was hard for a lot of people, investors that started at that, started beforehand. I know, in the early 2000s, they gave me a house with they gave me a mortgage with basically no money down, and I didn't really have anything to show for it. And they were like, yeah, sure, of course, here's your mortgage, buy this house. And it was very easy to do. Worked out well for me, but and it seems like it worked out well for you. But what was your experience during that time?
Yeah, so I had so this is bring back some amazing memories from that back in those days, right? So this was, like I said, it was a new construction. So what I did was, one smart thing I did during that part of time was I did not invest in a single family. I invested in a townhome. Mm-hmm. So relatively less exposure when it comes to insurance, right? So you are covered with a master insurance, so you just got to protect yourself from property and personal property insurance. So that was not a big hit, right? You obviously pay a little bit extra from the HOA standpoint, but that's not compared to what you have if you have your own single family where you have to maintain your lawn and a bunch of other things, right? So that was first aspect. The second was I really studied the market back in the day. So this is still, we're talking about Charlotte, right? So Charlotte has been, we're knock on the wood, has been growing for forever, right? Until the time that I have seen it. And I bought in a place where that area was really growing. So when we hit the downturn from a housing market perspective, obviously the values went down. But at the same time, we had the possession at a time where people would not be able to afford a house. But the same people who had good families, they want to get their kids in a good school, they would opt for not a high-end apartment, but a decent enough townhome. So that's where we were fortunate enough to get a series of tenants where we had a longevity as long as like 3 years, 4 sticky tenants towards that property. And that kind of helped us sail through where we were not making anything on the rent itself from a cash on cash or cash flow perspective, but we rode the wave, to get out of the downturn.
Yeah.
Now that you brought up, right? I mean, in 2006, late 2006, we also put money down on our primary home, which was about 5 miles from where the investment home was. Right. So this was again a 6 to 9 months of construction period, and that's where the whole downturn also happened. And I was laughing because during that time, before right after the closing of my primary home, I also lost my job. So I was fortunate that my wife was able to kind of pitch in and take over some
Yeah.
of the financial responsibilities. But then it brought back some good memory, as in, I was looking, obviously, I was staying home. I stayed home for about 3 months, trying to look for a job, of course. Then I found something where, my wife and I were sharing one car, and she had to go take that car. She was working out of Atlanta. So she would
Okay.
take that for the whole week. And then I would be all by myself here. And then when I got a job, then I had to be at a colleague's place. And then I would bike to my colleague's place, and then we would hitch a ride. I would hitch a ride to the office. It's funny though, when you are in a car, you don't realize how 5 miles look like. But when you are on a bike,
Yeah.
especially on a bike that's on a cold day of 0 degree temperature, right? I mean, you just
Yeah.
go out there,
Yeah.
you freeze yourself. But those are, I'm sure everybody has their days. But what I wanted to convey was, even during that time, I had the drive, right? So which is what is very important, and for the listeners as well, as to what keeps you going, right? I mean, apt to the name of your podcast, right? Know your why. So
Yeah.
what is your why? And that's where the whole upbringing comes into place, and what you have gone through, and what you have suffered, or what you have been through. It kind of shows into you, and you see your true potential. And that's where it's like, hey, you know what? All of my life, I've seen all things coming along, breaking apart, putting back together, breaking apart, putting back
Yeah.
together. So and what makes you going is the drive. So for me, it's the drive, right? So the drive to do something different, drive to have a good lifestyle, drive to have freedom for my family, and then eventually we're going to touch upon that, but also drive towards a good fitness level as well.
Yeah.
So
Yeah. Well, the biking to work, and we'll probably talk about this, but the biking to work may have been the
it
beginning of
was
your triathlon
right. And at
training.
that point in time, it was not cool to bike
Right.
to
Right.
to the
Right.
work.
At
Yes.
that point, it wasn't good. I mean, actually, it is an interesting point, sort of that you're talk about there. So my wife is from Charlotte, and
Yeah.
I met her because I moved to Charlotte. So I moved to Charlotte in 2008, right? But I moved to an apartment. So I largely didn't. I saw in my workplace that the caseload went down, but I didn't have that sort of house. I had essentially I had sold everything that I had bought, maybe
Mhm.
got a little bit lucky, but I had sold everything I had bought before the crash,
Right.
and then moved down to Charlotte and I didn't own anything at that point. So I was lucky enough to avoid, major losses there.
Right.
But you do bring up a really good point in the sense that it's it's market and asset specific, right? So
Yeah.
Charlotte, although, like I said, at work for a little while, our caseload was down. Charlotte was booming. I mean, it was growing, and it's
Yeah.
still growing, right? It's like a growing very much. And that's what it looked like. You didn't look there and say, oh, this is a city that's crashing. It was like getting
Yeah.
bigger and bigger, tons of migration into Charlotte. And then your point about it being a townhome and how that sort of fit into that niche of people that couldn't afford a house but didn't want to necessarily live in a small apartment is just very interesting, because you hear people talk about, oh, well, investing in townhomes and condos, that's not the way to go because those lose their value the most in a downtime. Or, this market doesn't work, that market, it doesn't. I think that you just have to do your own market research and do what's going to work for you. And you
Right.
sort of, I think your story there really proves that point, where you survived a downturn, and yeah, as you said, maybe it wasn't cash flowing, rents go down a little bit, but okay, give it time, and it comes back, right? If you're seeing a growing market, everything's going to come back. So then kind of what happened, we got through that downturn. Were you still kind of purchasing assets through that time until you started to think I know you had that sort of 3-year hiatus, but take us through that time frame.
Right. So hindsight, I should have done that,
Yeah,
right?
we
Because
all should have. Yeah.
yeah, exactly. So now that I think of, I should have probably invested all my money if I had that,
Yeah.
or whatever I had that
Yeah.
at that point in time. But I did not, right? So I pushed my brakes on, right, and kind of kind of went back to putting the basics together, right? So settling in a new home, getting ourselves situated as a family. So I've been very lucky. My wife and I, we went to college together back in India, right? So this is where we have shared pretty much all our life together, about 19, 20 years, married for 15 plus, right? I lost the count. I think when my wife sees this, she's going to kill me. But it's been that long, right? And we kind of go lockstep with each other, right? So, she took the baton when I lost my job, right? So she took the baton and worked her way out. She went to Atlanta all the way to kind of do back and forth, whatever was required. But point being, we then took a pause, got ourselves situated in our house up until from 2007 all the way to 2010, right? So that's where we got ourselves settled. And then in 2010, things started to come back up, or looking better. And then I got myself into a consulting job, right? So if you're familiar with IT consulting, what that means is get to travel around, work for one of the big four companies called Accenture. Accenture is a technology consulting, management consulting firm. So I got into that and got an opportunity to work for several clients and go around places and build my acumen from my day job perspective, right? So that was between 2008 and 2010. We got that situated. So I didn't really put any money, did not put any thought. My assets were still there. I also had between 8 and about 2012, I also did a couple of stints on some of the other ways of making passive income with absentee ownership, as some learning centers, some retail centers, and all of that. So I played my hand in a bunch of things during that 5-year period. And then back in like 2013 and 14 is when I jumped back in again into real estate, right? Which is where I saw, hey, you know what? Things are not going as expected from the other side of the businesses where I went. Right? Obviously, you are the sum of all the mistakes you make, right? And then I made a bunch of mistakes. Can't disagree with that, right? And I shouldn't call it mistake. I'll call it lessons, right? Every lessons.
Learning
some
opportunities.
Of them were learned at a cost of $5,000. Some of them were learned at a cost of $50,000, right? But those were costly lessons that I learned. And then eventually came back and I found my niche. And what I did over there was I cultivated good relationship. As Charlotte was growing, as you saw, there were a lot of new communities building, right? So what I did was I partnered with one of the builders in the area, and I kind of outright built a good relationship where I said, hey, you know what? Whatever you build, whatever units that are allocated towards investor, those are mine. So you build wherever you want to build. You just tell me in the community. So typically, I found my niche on the townhomes. So that's what I targeted. And so in the townhome build, they build by the pad, right? So they build one foundation and they build 5 or 7 or 8 within that. And then the CO process goes through, and typically builder by builder, they define it. But in a pad of like 7 or 8 homes that they build, they typically allocate about 50 to 60% to residential owners and about 40 to 50% in investment homes, because they don't want the community to be filled out as fully investment homes, right? So that happened, and I'm like, hey, you know what? Everything you have, Justin, is mine from an investor standpoint. So that between 2013, late 2013 to 14, 15, and 16 is when I grew. I went with the builder wherever they went. I took all of them. If I am able to take mortgages and get into it, I would do that. Otherwise, I would pass it on to my family, my friends, and they would jump in and say, hey, you know what, let's jump in. So between that period up until 2016, I kind of built my portfolio of my own townhomes that I was running. And one of the things that I always believe in is, you cannot be jack of all trades. So you have to partner with the right people so that you can focus on where you are good at, right?
Sure.
So from day one on the property, the first property that I bought back in 2005, I got the property manager to manage the property.
Okay.
And I took that cost as, hey, you know what, this is the cost of running the property. There's nothing, I'm going to make a little less on the cash flow, a little less on the returns. That's okay. Do I have time to go and attend to the tenant's problem? That's how I equate it. It is in a 6 hours worth of time in a month versus,
Yeah.
$100 in the fee. I would rather give that $100, right?
Right.
So that's how I equated. So between then and in 2016, I still have my same property manager from back in that day, and we share a
Oh.
great relationship.
Great.
But over that period, I kind of gave all of the property management to a property management firm. So that worked out really good up until 2016. And if you know about Charlotte market, after 2016, things started to go way off, where your cash flow numbers, cash on cash numbers,
Yeah.
and things were not making sense. I would say people were still making money, but you are not. There are only primary few ways where you can make money. You can make money with a good purchase price, right?
Right.
The purchase price were always off the roof.
Yep.
And then you can based on the purchase price, how much rent you can command, right? Typically,
Yeah.
I follow a 1% rule, which says, hey, if it is a $250,000 worth of a house, can you get 2,500 in rent?
Right.
If not, then that's the equation. It's not going to fit. And then whatever
Yep.
you do, at the end of the day, you might have like a $5 for Starbucks coffee. That's
Yeah.
pretty much. And then
Yeah.
you enter into a huge risk with, let's say if the tenant skips for a month in the year, you basically have wiped out everything that you had for the whole year, right?
Yeah.
So that's what up until 2016. Then after 2016, I stopped doing that. So I'll pause there from the timeline perspective.
Yeah. So how many of those townhomes? I mean, I think that was sort of brilliant to connect with a builder and just say, I want I want everything you have that's allocated for investors. That's great to form that sort of partnership. So how many did you end up with in terms of townhomes?
So at some point I had with various partnership and everything, I had about 15.
Okay.
So
great.
And then in 2019 I got rid of a few, and then I still own the rest of it.
Okay.
So about
Awesome.
11, 12 I own.
I do know the Charlotte market. I'm sure that even just the equity that you've built up in those
and
is great.
Just from a financial standpoint, right? I refinanced all of them, and all my cash is out. Those are now on cruise control. So
That's awesome.
we get what we get. So and then I took that money and invested somewhere else. So that's typically for any investor, they would probably follow the same path.
Yeah. I think that's a similar kind of journey that people have, sort of as they grow. So, okay. So then you took the years off, those 3 years off, because prices got sort of a little bit unmanageable. And then what? I know, you probably had a little bit of a shift there in 2019, it seems like.
Yeah. So that's where, I was always on the lookout for, what's the next best thing, right? I mean, that makes sense from a number standpoint, right? I mean, we can emotionally get into any kind of business we want, right? Then you want to make sure that you put the emotion out of it and look at practically on the numbers and say, hey, does this really give me a return? It's not a return in the future, return in the form of some other form. I mean, how much money or how much cash on cash I can bring, right? I mean, that's and I looked at quadplexes, duplexes, smaller multifamily, all of those. But then again, the numbers were not making sense. And at that point in time, I was not privy to all I did not get myself equipped with the right knowledge to kind of drive those conversations, right? Okay. And then obviously during that time, I was also building my family. So, I got 2 beautiful daughters that I have. So, we were kind of having the fun of our life, and, with parents and everybody around us. So it was a kind of a fun time up until 2019 is where, we were at a friend's house, everybody, drinking our hands, and back of the cardboard is where my partner now and a buddy in our life is Himo Badiani. And he and I and a bunch of other friends, he's like, hey, why don't we get together? I got something to show you guys. And we took down, it was literally a cardboard box, an Amazon cardboard box, flipped around, turned around. We took a marker and he started drawing and telling us all about all the classes, all the return types, syndication, this, that. And then I was two drinks down and I'm, clarity in my mind. And I'm looking at and I'm like, where was I? Or why is it coming to me right now? Why is it
Right,
not coming? Where was I 3 years ago when things were completely different at that point in time?
Yeah.
So again, the way I am, I just head first. Right after that meeting, talk to him all, and I'm like, hey, let's do the next thing. So we kind of enrolled in a bunch of training programs, workshops, and got ourselves equipped for a good amount of a year, and then started plunging into multifamily deals. So did a few LP deals, a few GP deals, and now we're operating on our own.
Okay, great. So and did it sort of go in that order? You started as LPs and then kind of got yourself into the GP side of things?
Yeah, exactly. So what we did was we attended several conferences, right? Conferences and boot camps, right?
Mm-hmm.
And what we learned was, more than obviously you want to play the game, you've got to be on the court, but at the same time, you need to know the players that you're working, right? So
Right.
What we realized, and most of the listeners will also realize, that multifamily is a team sport, right? So if you are a rock star, which everybody is, but you will be at some point needing help, right? Yeah. And if you acknowledge that right from the beginning, then you can focus on the areas that you can work on, and then work with the partners where they can bring their expertise, right? Yeah. So that's the lesson that we took right from the beginning, and we started to forge some good relationship, right? And what that would mean is we wanted to put our own money, right? So we wanted to learn the game, right? So this is where I had, by that time I had changed my job from Accenture to a local company, right? So that's where I wanted to get myself more present to grow my business. So that's why I changed my job. So I had a fresh part of my 401k money, right? So I did move all of that into self-directed IRA and put that into the LP deals. So, and it still has it, it's still there. So that's the plunge from an LP standpoint. And what we eventually did was, all of those LP deals, we kind of understood the structure of the deal, understood the various moving pieces in the deal, right? And establish a niche where you can bring value, right? What is the point where you can bring value? I mean, are you good at acquisition? Are you good at investor relation? Are you good at operation? What are you good at, right? So it kind of working through those deals kind of help us identify, and that's where we when we formed our brand and our company, Exponential Equity, that's where we wanted to make sure that we bring the complementary skills, right? Just so that we gel together. So that's where you would see him all going out from an investor relation perspective, marketing perspective, and then you will see me on a little bit of a back burner, where I take care of most of the operations, asset management, that kind of thing. Okay. So we kind of forge that right partnership. So along with the two of us, we also kind of partnered with several other players within the multifamily market, and forge that relationship and build that right network.
Yeah, that's a very important, I think, component of especially multifamily when you get into the syndication space is, and I think, kind of listening to the whole story, I feel like there's been a bit of a theme, which I think is an important one, is sort of forming the right partnerships, right? So you, even right in the beginning, you talked about just with your wife, right? So just having the right person by your side, where when one of you is down, right? You lost your job, she picked up the slack, and then you kind of you be there for each other. And then that same thing applies to business relationships. It's home relationships, business, all of those partnerships. It's all kind of the same stuff. You just have to you find those right people, and it's going to make everything easier and more achievable. to
Right.
have that support system in place. And like you said it best, it is a team sport when it comes to syndication. But I think marriage and raising kids and all of it is you can't
Yeah,
doing it
exactly.
alone
No,
is you're not going to be nearly as effective. So seems like you discovered that
right.
very early in the process in terms of what's needed there. So maybe tell us a little bit about your portfolio at this point. Where are you at? I know you said you still had, I think, 11 of the townhouses left, and then
Yeah, so I still own and operate those townhouses. It still works with my property management company. Right?
Yeah.
So on the multifamily front, like I said, we got into LP deals, 3 separate LP deals, right? So put my money into that. Then we became co-GPs, where we were capital partners and then helping out in boots on the ground and asset management side of it
Mhm.
on 3 other deals, right? So
Okay.
that's the progression that we took, right? So this is, and you'll be fascinated with the timeline, but this was starting April 2020, which is at the start of COVID. So at the start of COVID, we invested in our LP deals. September 2020 was our first co-GP deal, right, which we
Okay.
closed. And then from that point onwards, our recent close was a 246 units in Winston-Salem, where we are the sole operators on that one. And we are in the process of closing 460 units in Houston, where again we are the sole operators on that one. So between then and
Fantastic.
now, and also we'll dabble a little bit into the new construction side of it as well, because when you play the game, you play the game on the court with all the various levels that you have, right? So this is where we kind of plunged into not only on the value add side, but also ground up development. So I'm engaged in a couple of ground up developments as well in multifamily asset class, storage unit asset class as well. So we're kind of doing a bunch of things just to make sure that we want to, scaling was one of the things that we wanted to achieve. So this is our direction towards scaling. But as from a portfolio standpoint, I think we're right around 800 units, about close to about 100 million in assets under management. And we'll be closing on the 460 soon, and we'll beyond that we have a couple of other places where we are into ground up development as well. So it's exciting so far from 2021 and into 2022.
Yeah, I mean that's for anyone who's listening doesn't realize that's an incredibly fast scale. I think that's amazing. So I have so many questions about that. So I guess the LP side of thing, I think the progression makes sense, right? LP, then you're co-GP, and now you're being the primary sponsor. Let's talk a little bit about sort of the capital raise side of it, because that's a lot of capital to be raised on that many units, and obviously in a short period of time. So how did you I feel like for myself and a lot of people I've spoken to, that is one of the hardest components when it comes to multifamily syndication. So how did you sort of tackle that in terms of capital raising for these? Now your deals are getting bigger and bigger very quickly.
Yeah, so a couple of aspects, right? Like any syndicator you would talk to, right? They would have tapped into the friends and family first, right? And that's where you build your credibility, right? So everybody goes by your word, right? If you say, hey, first question I would get asked is, are you putting your own money, or would you put your own money? Mm-hmm. And if I am hesitating, that means I'm not being honest and open to make them aware of the risks that are associated with it, right? So that being said, risks, even crossing the road has a risk, right? But then we gotta disclose that risk, and you understand what comes with it, right? So with that being said, I think the first point of our approach was from a friends and family perspective, right? So this is where both Himal and I come from a consulting background, like I said, right? So we were, as part of being Accenture, right? We always helped in formatting the strategies and building, scaling services and building teams across the globe and things like that, right? So that's where we kind of taking a cue from that. What we did was eventually started building our own team as well, right? And what the way we started was we started that with a foundational brand, right? So we invested. You see a lot of new players. What they would do is they would first start acquiring properties and then build a brand. So what we kind of went against the grain and we said, hey, you know what? Let's build our brand, right? Which is us,
Yep.
and what we bring to the table, and what kind of fiduciary responsibility we have a lot of, for our investors. And we built that brand. So we invested heavily in our brand, right? So if you all the listeners go to our website, they find a lot of content as to what we had done, right? We wanted to establish ourselves. So we built that brand. We built our team around it, right? Getting our team together. And with that, we let the brand do the talking, right? So, and then, it kind of preceded ourselves in terms of where we went and how we projected ourselves, right? So that was one on the brand side. The second one was getting ourselves out there, right? So with the help of brand and the networking, and then we also started to build some good relationship with brokers, right? And getting ourselves out there, right? So our name was getting out there. A lot of people started to get to know us, that, hey, these guys are up and coming, really doing well in there. So that's where our name came in. And then once we started putting together the deals that we were doing, right? I mean, we looked at it from the lens of investor, right? Being an LP myself, I would wear my LP shoes or LP hat and just jump right into and ask all sorts of questions to him all before we even make it public for our raises, right? Hey, what are the catches, right? Everybody wants to sell the deal, but there has to be some downside to it, right?
Sure.
Are we upfront, and are we telling everything that investor needs to know, right? And at some point we also had several deals in our pipeline, right, where we were raising for two or three different deals. And at that point in time, I would disclose it very openly to all the investors, saying that, hey, I have 3 deals. This deal works this way. The second one works this way. Third one works this way. I would let you choose what is your risk appetite, and then build that, invest in that property. So what we did with that was this eventually brought in trust, right? So that's one of the big components when it comes to the investor, right? They know that you are going to be responsible with your money, right? So there are type of passive investors where you once they write you a check, the next time they come is they're going to write you a bigger check, and then third time they won't even talk to you. They will just send money, and then you'll be done with it. So that's eventually that's our goal, and to a certain extent we have achieved that, but we're still learning in that space, and we want to make the most out of it. But those are the 3 things, from building the brand, building the team, building the right network so that we get ourselves out there, and then putting the right foot forward and putting the hat of an investor and looking at each and every deal, evaluating that and presenting it to the investor.
Yeah, no, that makes sense. So you did all this during COVID. So how did you, obviously networking was a bit of a challenge during that period. I mean, was this just all, kind of friend and family referral types, or did you have other ways that you were doing outreach and things like that? How did you handle that?
So, and I'll be honest, I have been traveling during COVID as well, right? So I've been fortunate to have good health for me and my family, right? So, given the state of our business, right? All the deals, like, for one of the deals in Lafayette, Louisiana, were boots on the ground. So we have to get there every quarter to prepare a report, right? So inevitably, till the time when it was closed, up until now, which is coming up next month, I'm going to be there, right? Mm-hmm. Because that's a job that is masked up, shielded, whatever you call it. I was there. Himo was there, right? So we were there to do the duty, right? So and through the online platform, through the friends and family, through these, the events itself were not happening, but the deals that we were part of a network itself. That's how we were investing with our network, and then that kind of organically grew, and like the way you were saying, right? It's a finding the right partnership.
Yeah.
It's, we term it partnership as marriage only, right? So once you are in a partnership, it needs to go on. So you need to find those right partners, and we kind of build those offline relationship, online, getting on the calls, getting on the Zoom calls, continuous communication between the partners, online, offline, in person, and then it started to and then eventually, from past few months, things have drastically been different and been more face to face. But that was the primary way we did it.
Yeah. Okay. And so what's next for Exponential Equity? Sounds like you've got this very rapid growth. It's what's the plan? What's the your I guess long-term goals? Yeah.
We have in the terminologies of all of the self-improvement books you follow, it's a terminology called BHAG, right? Which is a big, hairy, audacious goal. Mm-hmm. So our big BHAG is $1 billion asset under management, right? In the next 2 years, right? So we're at 100, and we recently acquired, in the process, we got it under contract, 154 acres worth of land, close to Charlotte, and we have a plan to develop that all from a mixed use perspective.
Yeah.
Retail, single family, apartments, townhomes, you name it. And one good thing about that is the city is very helpful, right? So that's one of the big plan, right?
Yeah.
We got several pockets of land where we are building townhomes, so that's another project. And then the third one is we got ourselves into a self-storage unit development as well. So that's coming up in the next 4 months, I would say. So we're going to be venturing into that as well.
Okay.
And eventually, from a long-term perspective, in that $1 billion asset under management, one of the other aspects that we want to do is we want to be vertically integrated, right? So right now, we're partnering with a lot of different players in terms of property management, construction management. We want to bring all of that in-house, right? So we are developing our arms across, right? So now we're a team of 8 right now, right? So we have our own acquisitions team, investor relations. We also have our construction management, land development team, right? So that's how we are growing, so that we can kind of encompass and start. We're eventually looking at building a property management, bringing in a property management arm, asset management and property management. So it's organically growing into a vertically integrated company, so that we can all, it all gels together, stays together, and it kind of builds a good story for somebody who is coming in, where that you can go to this particular entity and they got you taken care of, right? So right from the beginning.
I think that vertical integration is very appealing, but it certainly takes. You have to reach that inflection point where you have enough, units or assets, and whatever you want to call it. You have to have enough to have it actually make sense.
Right.
You guys are getting there so fast, I think, that it makes total sense for you to have, start thinking about it in terms of, just having everything under one entity, or one roof anyway, that kind of is in terms of management and development and all of that. So that's great, Yomesh. Very, very, very impressive. I'm quite.
Yeah, and in a nutshell, what and just from a analogy perspective, right? I come from a technology background, right? So you see a lot of startups coming in. So what we treat ourselves is a startup.
Yeah.
Right. So we're going to be really aggressive in terms of what we want to do. Right. We have a vision where we want to achieve what we want to achieve. Right. And we're putting all of those objectives in place and measuring ourselves at the right point. Are we getting there or not? And then course correcting ourselves to go somewhere else. That was not the right place to be. And that's the way we are treating ourselves, to be nimble and agile, right, in a technology term. But at the same time, keeping ourselves geared towards that objective, the long-term objective, and treating ourselves as a startup, right? So you fail fast, right? That's the motto. If you want to fail, fail fast, so that you know, and then you can make a correction to it.
Right. Right. Yeah, that makes a lot of sense. And you said that you're still working your W-2 job through this?
I am still working on my W-2 job. Yeah.
Right.
Yeah.
You're not a very busy guy, it seems.
Yeah.
No, that's great. Well, then I better not take up too much of your time. Then there are a few questions I like to ask everyone during each episode, and so I think we can dive into those. And I think some of it we've touched on a little bit, but the name of the podcast is Know Your Why Podcast, and so I think that sometimes people's why is evolving, right? It's maybe not the same when you're 20, it's not the same when you're 30, when you're 40, whatever, or just at different stages in your life. So maybe you can just speak to what is your why at this point, Yomesh, that's sort of really driving you. I know you said you've got that big audacious goal, which is phenomenal, and I honestly feel like you'll probably beat that goal. But what drives you in terms of your why?
Yeah. So, and you brought up a good point. I think my why has evolved over a period of time, right? Like I said, come from a very humble beginning, right? So getting by on the life, right? Getting food on the table, and from that point onwards to getting ourselves, parents working towards getting ourselves into the right education and getting us to the point where we are, right? I've seen pretty much everything that has to be seen. And my why event in the beginning was towards the money, right? So hey, I need to be in that comfort zone where I can say, hey, this is working out for me. From that point, it evolved, and now towards money is a part of it, but the lifestyle, right? So am I able to dedicate my time towards what things I wanted to do, right? Is it fun, family, fitness, or friends, right? Or finances, right? So those are the F's that I follow. And where is my time equated, right? So this is one of the mentors that I follow. He kind of put it out there. It says like fun, family, finance, fitness, and friends, right? So where you take your day down and put your day into all of these, where are you spending time here, or you can, so that with that in mind, my why has evolved. And with keeping all of those F's in mind, I kind of graduated into a lifestyle. Right? What kind of lifestyle do I want to live? Right? I want to be available for my family. I want to go enough vacations where I can truly spend time with my family. My kids love going out, so that's one of the things. And then now my why has evolved where I'm trying to build my family and trying to bring them in at an early age. So my kids are 10 and 7, and I'm ingraining them with that. Hey, this is you. If you want to do a 9 to 5 job, that's your choice. But if you want to work, like you want to have the freedom of time. You want to follow what you want to pursue, and you want to pursue like what you like. Or, you love what you do, or you'll have to, or it's the other way around. You start loving what you do versus I forgot the train of thought. But eventually, what I'm trying to get there is my next step is to get my family in, my kids in at an early age, bring them in the business and make them evolve in the business, have them learn, because that education is not provided anywhere, unfortunately.
Yeah. Totally
run a business. So that is my in addition to their schooling and everything that they're doing, I want to teach them the basics of the business as well. So that is how my why has evolved.
I 100% agree with that. Sort of the legacy component of it, right? It's not even so much. It's not about like handing your kids a pile of money. It's really about teaching them how to sort of do what you've done and create that freedom, the time freedom, and just sort of being in control of your own life and lifestyle. So I think that's amazing. Well, I kind of think I know the answer to this one, but tell me tell the listeners something that maybe people might be surprised to hear about you, whether that's a hobby or a special skill or something. I feel like I might know what you're, but you could surprise me too. That'd be fun.
Yeah, so going by the theme of what I've talked earlier, right? Getting head first, right? Jumping into it. Fitness was one of the things that I realized at the age of 39 that I'm not fit, right? So the next thing I know is I signed myself up for a half Ironman, right? So this was anybody going through their, call it a midlife crisis or whatever. But it was my 40th year, and I'm like, hey, I need to do something that has never been done before. So, or at least challenge myself, right?
Right.
What is my limit that I can test, right? For the listeners, a half Ironman is 70.3 miler distance where you swim for about 1.2 miles. This was in Wilmington, North Carolina. So this was next to an ocean, a bay next to an ocean. You swim for about 1.2 miles. You then go on a road bike for about 56 miles, and then you run a half marathon towards the end, and you do all of that back to back. So this was a thing that I jumped into it, head first, and never swam before, never rode a bike, always did a walk, so never ran. So this was again a challenge that I took in, and I'm like, hey, you know what, this is something that I'm going to do. So jumped right in, and I finished the race. That was my goal. So I was not timing myself, but I wanted to go through that finish line. So which I did.
Yeah, amazing. That I have done a couple of sprint triathlons, which is a far cry from the half Ironman. It's right. A half mile swim, and I don't even remember short distances comparatively.
I registered. Call me crazy, but I registered for 2021's race as well. Yeah. So and then with my story, I got a few of my friends motivated as well. So we are now a pack of 6 people going into that same race, and none of them have done anything. So they're like, if you can do it, we all can do it. So
and it was an ocean swim.
It was at a bay next to the ocean. Yes.
Okay.
Yeah, so salt water. Yeah.
I don't think. Yeah, I think probably a lot of people don't understand the actual level of difficulty that is, but I do. I found that the swimming was by far the hardest part of you can kind of get on a bike and pedal it. You'll be sore, but you can get on a bike and pedal it. If you don't keep swimming, you just drown. So there's a component to that where you really have to push yourself. So very, very impressive. Yomesh, let's we'll put everything you want in the show notes, but kind of tell people how they can reach you. What's the best way to kind of get in touch?
Yeah, absolutely. So my website, you can always reach me through my website, exponential-equity.com, right? You can also email me at yomesh@exponential-equity.com, right? And one of the whys that I did not go into was also give back to the community. So I'm engaged in several different ways to give back, and being as part of the podcast and receiving any questions is one of the means to do that. So please feel free to connect with me. I'll be more than happy to give you any information I can, and I'll be of any help.
Awesome. Okay, final question is, what advice would you give to someone, I want to say was a little behind you, but I guess we have to talk about maybe just the early 2020 you. What advice would you give to someone who's, sort of getting going, and what you would suggest that they do?
Yeah. So one of the things that you would know is, up until you don't know what you don't know, it looks difficult, right? Because you are in a territory of what you don't know that you don't know, right? But once you start learning, you start to know about things, and then you start to put the pieces together. So number one thing is find ways to equip yourself with the right knowledge, right? If that means listen to the podcast, listen to it, right? Audiobooks, YouTube videos, getting in the right meetup groups, masterminds, if that is required, right? Surround yourself with the company that is going to, elevate you towards the next level where you want to be. And I'm sure a lot of listeners have heard about that. But on the basic ground level is, compared to what where we were in 2005 and 7. Right now, there's a lot of different means where information is imparted, right?
Yeah, absolutely.
And knowledge is imparted. So take advantage of that and just plunge in, keep learning, because that's the goal, right? Find ways to keep learning and keep going.
Yeah, learn something every day if you can. I think, and great point in the sense that you can't say that the information is not available.
Yeah.
Right. There's a million podcasts. It doesn't have to be mine. It can be there's podcasts out there. There's so many books now on these topics. There's so many mentorship programs. There's so many good people like yourself that are just willing to talk to people about what they've learned and kind of help share success. It's all about, I guess, that abundance mindset where it's not really a competition. It's that we all want to see each other succeed. Like I'm very excited to hear your story and honestly very excited to see what the next year brings, and I'll have to get you back on the podcast again because I imagine there's going to be a whole lot more to it. So this has been a fantastic conversation, Yomesh. I really appreciate your time and having you on the podcast. So thank you so much.
Thank you, Jason, for having me. And it was a pleasure to be on the podcast. Thank you.